In yesterday's video, we answered one of life's great questions, when to buy a stock exactly. Well, that's great. Now you know when to buy a stock, the things you want to look at for buying a stock. But now the question is, when should you go ahead and sell that stock? One of life's other great questions, guys. It's one thing to know when to buy it, but then, a lot of people get caught into the game of when do I sell it? And they sell way too early, or they hold on to a stock way too long and end up taking a big loss. There's a lot of different things, guys. Now, once again, with the stock market, you shouldn't always expect to make money 100% of the time, especially if you're looking at it over a long-term perspective, over a decade, 2 decades, 3 decades. It's a lifelong game, okay? You shouldn't always expect to make money in every single stock you buy. However, the goal is to make money a lot more times than you lose money, okay? That's the name of the game, and the trick is, when's the perfect time to sell? So let's kind of get into this. As with buying a stock, selling stock has so much debate around it on when's the right time to sell, because you've made money on it, or you've lost money on this position, or maybe you haven't done anything with that position. Maybe it's just flatline. What should you do? So a lot of people, they think, okay, you buy in here, your stock's just kind of moving up, and then boom, you kind of get a little pop. You get a little pop right there, you make some money, and some people will say this is a time to sell. Sell it right then and there. You made your money. Don't be greedy. Don't be greedy. You made your pop there. You got, your 10% gain or whatever. Go ahead and sell out of that position. Now, move on to the next one. Some people will say that, okay? Let me tell you about a stock I bought. This stock was named Facebook. So the stock named Facebook, right? They go public, and it's a rough public offering, okay? And, 6 months later, the stock is chopped in half from where they went public at. I looked into the company, and I really liked the company. I understand they got a big opportunity in front of themselves, and I didn't even understand Facebook nearly as well back then as I do today, okay? And so I look into this Facebook, and I'm like, I'm gonna buy some shares in this Facebook stock. So I buy what was at that time a lot of shares worth, for my net worth at that particular time, and I buy into Facebook stock at $18.80. $18.80. All of a sudden, very quickly, the stock rises, pops. It goes to $19.90 or something like that, or $19.80. In a very quick amount of time, I made a very nice profit on Facebook. And I was like, you know what? I'm just going to go ahead. I'm going to take my profit right now and run out of this one. Well, that was about 6 years ago, 5 or 6 years ago, and now Facebook stock is somewhere around $180, I believe, maybe $170, $180. You guys can look it up, ticker symbol FB, somewhere around there, okay? So, from the perspective of, should I have gone ahead and sold out of that position? Obviously, no, I should not have. I should have held those shares for the long term, but I made a little bit of quick money, and I was like, whoa, I made a quick money on this one. Let me just sell out and take my gains and run. And I was listening to kind of all the negativity, which Facebook had a ton of negativity around that time. Not a lot of people understood the stock. I take my little bit of money and run, and now it's a $180 stock. Do you think that was a very good decision? No, that was a horrible, horrible decision to sell Facebook stock at 19-something dollars a share. It's like a joke price, all right? So that doesn't really work, okay? That really doesn't work. Now, some people will say, well, don't sell, early on. Wait till you get a real big gain up, okay? Wait till you make 50%, 100% on your position, all right? 50, 100% on your position. Well, once again, we can look at me with the Facebook situation, right? I could have said, okay, what if all of a sudden, I buy in $18 and it goes to 36. I make a double up, and I think a year or two later, it was like a double up, all right? And I sell out at $36. Well, guess what? Over the next 3-4 years, it went from $36 to still $180. So still, it would have been a horrible decision. So when you buy into a stock you really like for the long term, to say I'm going to take a quick profit, or maybe even a big profit, it doesn't make sense to look at it from that perspective, okay? Of just like, oh, it went up, and so let me go ahead and sell out and take my gains. No, that's not the way this game works. Now, some people will say, if you got in a stock, and this stock is just not doing crap for you, it's just moving up, down a little bit, and you've been in this stock for a while, move on to the next stock. Some people say that, it's just kind of like a flatline stock, move on to the next one, all right? Okay. I have a stock that I bought. This was similar to around the time I had bought Facebook, okay? This company was named Pandora, ticker symbol P. Pandora Internet Radio. This was very different, back then. Now there's been so much innovation in the music game. There's been a lot of things that have changed. Apple Music's come along. Spotify's gotten way bigger. But back then, Pandora was this internet radio company. It was losing money at the time. It was actually, I think, the first company I ever invested in that was actually losing money, if I recall. And they couldn't make money, but at the same time, their opportunity was was huge in front of them, and they had massive growth ahead of them, okay? And they were growing revenues like crazy and whatnot. So I buy into this Pandora company somewhere around, I think it was around $8, somewhere around there, okay? I hold this stock for nearly a year. It goes from $7 to $9 to $8, and a year later, I'm still, the shares are somewhere around $8 still, okay? And I haven't made any money really in the stock. I haven't really lost any money in the stock. And I held it for nearly a year, which at that time was still kind of within my first few years of investing. So it was like all the time in the world, right? All the time in the world. So I got frustrated with this stock and I sell out of my position completely at a rate around $8. I might have lost a little money, I might have made a little money. It wasn't much at all, okay? It was basically around break even. I just got frustrated with the stock and I was like, you know what, screw this, I'm selling out of this position, right? I sell this position. Well, 18 months later, a year and a half later, Pandora shares are at $43 a share. 18 months after I sell out of my position, right around $8 a share, guys. So, needless to say, that was a really, really bad decision. Just because a stock hasn't done much over the past year, or maybe we can say even 2 years or 3 years, doesn't mean it's not going to do a ton in the future for you. Once again, it depends on the business, it depends on where the narrative with the company's going, all those type of things, okay? So this was a stupid idea, guys. I could have made a ridiculous sum of money, okay? This was probably my third biggest position at the time. Pandora is probably my third biggest position, and I sell out it completely after holding it for a year and a half later, it's at $43 a share, okay? So this whole game of, oh, it's flatlining, okay, that doesn't make sense to necessarily sell. And at the same time, you know, Pandora could have gone down, absolutely, but, you know, you gotta judge off business fundamentals, not what that stock is doing as far as what the stock price is doing. Now, lastly, some people will say, you know what, if you buy into a stock, you know, you buy into a stock right here, and this stock shoots down, you need to sell out of that position, okay? You know, put a 5% stop loss on it, 10% stop loss. Like a lot of different people have different opinions. Stop loss meaning if it goes down to that price, it's just gonna automatically sell your shares. Of course, if it gaps down even more, you need to have a range in there and things like that. That's more complicated trading stuff. But some people say, you know, if it goes down, gaps down 5, 10%, sell out of that position. Just get out of it, man. Wall Street doesn't like it right now. Get out of it. Oh my goodness, once again, this is a really, really bad decision. What would Warren Buffett tell you in this situation? What would Warren Buffett tell you? Pretty much any great value investor. What they're gonna tell you, you buy a stock here, okay? You love this stock. And it goes down to here, and you still love the business fundamentals of this company. You don't sell, you buy more, okay? Warren Buffett, myself, any great value investor, they're gonna say, you really love business fundamentals of this company. If I love a company, like their business fundamentals, I think they're gonna do phenomenal over the next 3, 5, 10 years. I really believe in this company a lot. I look at the numbers, look at the business, everything in general. And I look into this company, I love it. It goes down 10%, and I still love the business fundamentals here. Does it make any sense at all for me to sell these shares? No, it makes sense to buy more. It's like going to I don't know, H&M, and you see a shirt there in the window, and you're like, dang, I really like that shirt. I think I want to buy that shirt. I don't have quite the money on me today to buy it, but maybe I'll come back next week. Next week you come back, that same shirt's in the window, but now it says buy one, get one free. It says buy one, get one free, or buy this shirt, get 10% off. And it's like you going in the window and saying, you know what? Now that it's 10% off, now that it's buy one, get one free, you know what? I don't want it now. That shirt, it's not my, you know what? I don't want that. What? Like what? Like that makes no sense whatsoever, guys. That makes no sense whatsoever. Now, if business changed and things like that, you know, it's worth selling out. But if you still like the business fundamentals, just because the stock goes down does not mean you should sell out of that share. I cannot tell you how many people sell out of shares when they go down, okay? Imagine, there were people selling Facebook shares when it was at $20 a share. I mean, it went down to $18, $17, right? There were people selling at $20 a share of Facebook. And we're probably like, man, I really like this company for the long term, but it just went down a bunch and I lost some money on it, so let me just sell now. And then they sell out of the position and now Facebook's, like, you know what I mean? Just think about that, guys, from that perspective. Nvidia's of the world, all these hot stocks, Amazon, you know how many times Amazon's gone down a lot? It's gone down a lot, many times. Tesla, there's been so many shares. Netflix, I still remember it was like yesterday, Netflix shares were like 30 bucks a share, right? And now Netflix is 300, I think, or somewhere around there, I want to say, Netflix. Like guys, you got to judge it off where the business is going, okay? So now let's get into why I sell out of a position. There are 3 reasons why I decide to sell out of a stock, all right? The first one, the first reason I would decide to ever sell out of stock is what I call bad, okay? If things have gone really bad for that company, business fundamentals, not stock price performance. I'm talking about underlying business fundamentals, income statements, balance sheets, things like that. If things have gotten really bad for the company, I may sell out of that position, especially if there's something, there's like usually like a few things that are like my bullish theses on stocks, okay? Any stock I buy into, you know, I always have bullish theses, like there's like 1 or 2 or maybe 3 things I really love about that company and why I think that stocks can go up a lot over time, why they're going to expand their revenues and profits and things like that. So I buy into this stock and all of a sudden one of the 2 or 3 bullish theses I have on it goes really south. Like one of the business lines that I'm like, I think they're going to expand and make that into a huge thing. If all of a sudden they exit that business line, what do I have left at that point? What do I have left? That's probably a situation where I want to sell, okay? Things have gotten bad. You know, maybe the company does something crazy with the balance sheet where the balance sheet was a phenomenal balance sheet, but over the course of 2 or 3 years, maybe all of a sudden the company starts losing lots of money. Maybe they start paying out all their money in dividends and whatnot, and all of a sudden this balance sheet goes from a balance sheet that's rich in cash and investments, and all of a sudden they got a ton of debts on it. There's a situation that things have gone bad. Like it's time for me to get out of that company. If the fundamentals underlying in the business erode, if the bullish thesis I had going into that stock erodes and goes away, then what am I in those shares anymore? It's time for me to just get out. Whether I have made money in that stock, whether I've lost money, whether the stock hasn't done anything, if the business fundamentals erode and get worse for the company, and it's not like, oh, the company missed numbers by like 3 cents, or the company missed numbers by, you know, 5% of the revenue. Like I'm talking about actual business fundamentals, like the big things that are overarching, that are really going to dictate that stock price over the next 5, 10 years. If those things go away, it's time for me to get out of that position. I don't care if I made money, lost money, it doesn't matter. It's just time for me to get out of it. The number 2 reason why I'll sell out of a stock is honestly if it's just gone up too much, okay? Now what do I mean by gone up too much? What do I mean by this? Because once again, this almost goes back to the whole thing we were talking about earlier. Well, the stock pops 10% or 50% or 100%. Do you go out and sell out? What do I mean by the stock gone up too much is the way I like to think about it is, okay, if I didn't have a penny invested in this company right now, would I even contemplate buying shares in the stock as of right now? If the answer is no, it's time for me to sell those positions, okay? Think about it this way. Like why would you expect someone else to pay a super high price for those shares if you were like, I would never pay this price, you know, for these current shares? Like that makes no sense at all, guys. That's when you get into greed territory. When you're thinking in your head, like someone's crazy for buying these shares right now. I own these shares over here, but someone's stupid if they bought these shares off me. Like they gotta be crazy. I would never buy these shares at this price now. If you're thinking like that, like you need to get out of that stock ASAP, okay? Don't ever expect someone to pay a crazy price for your shares when there's no way you would pay that type of price, all right? Now, there's certain times where you just invest in a certain amount of money in the stock, and regardless whether it goes down more or whatnot, like you're set. Like you have your position built in that stock. That's not what I'm talking about. I'm talking about if you didn't even own any shares in that stock, and you looked in that stock, you're like, dude, I would never buy shares in that stock. If your grandma came to you and was like, should I buy some shares in this stock? And you're like, grandma, no, like the stock is way overpriced right now. I still own the shares, but don't buy these. If it's like that, guys, oh my gosh, like you need to get out of that stock. That's just crazy, okay? That's just crazy at that point in time. And the third reason I will sell out of a position is what I like to call Michael Myers, all right? The Michael Myers effect, I guess you could say. Anybody that's ever seen the Halloween movies knows Michael Myers. Basically, he's this, like, you know, super villain, whatever you want to call him. And, you know, he kills people and whatnot, serial killer. And he comes up behind people. And I'm talking about this in the respect that companies have Michael Myers coming behind them all the time, okay? The question is, do they have a serious competitor, right? Everybody in retail over the past 5-10 years has had this little company, this Michael Myers company. They might put a little software in that, but they've had Michael Myers coming behind them. And what is Amazon doing is killing retailer after retailer after retailer, and it's causing death to them all, okay? And, you know, some of them are just getting sliced up a little bit at a time, you know, just a needle here, a needle there. Other ones are getting machetes into them, okay? That's what it is right now. So if you own a company and Michael Myers is coming behind you, man, you need to freaking get out of that stock, okay? I don't care what PE that company's at. I don't care, you know, what that company has going for it, things like that. If you feel there's something serious coming behind your company that's going to be a major competitive threat, regardless, you need to get out of that stock, okay? That's not a stock you want to be in. If you know in the back of your head, like you feel like your company's not going to win this war, and you got to be realistic with yourself, okay? You can't like have too much pride for that stock. Remember, you're dating stocks. You're not marrying stocks in this game. You're dating them, okay? You know, you can move on to the next one. When you think about it in that respect, guys, if there's a major competitive threat, you just have to be real with yourself, okay? And say, man, I don't think I want to own these shares anymore. Like think about it. Think about if you own Sears stock, okay? You own Sears stock for the last, I don't know, 15 years or whatever. Like, you could have seen all this stuff coming unless you were completely delusional. Like, I don't know who's been owning Sears shares like over the past, and have they gone bankrupt yet? I'm not sure. But who's owned Sears shares like over the past 10, 15 years? Like, it's got to be idiotic. You look at it, you know, they had Walmart coming after them and Kmart, and their sales were declining, and you know, things were getting worse for that company, and they started taking losses. And they bought Kmart, which was a horrible decision, if I recall. They bought Kmart. My goodness, what a disaster that was. Then all of a sudden, Amazon starts coming in a major way into retail, especially over the past 5 years, and they start stealing away, you know, sales from not only Sears but all these other competitors. Like Michael Myers was obviously coming, but people were delusional and like, oh no, it's not going to happen to my company. You got to be realistic with yourself, guys. You don't want to be in stocks that is obvious there's some competitor coming in and they're going to start taking major market share. Those are the type of companies you don't want to be in, man, because that's just a bad situation, man. Your company's more than likely going to get rolled over. And now, once again, this doesn't just mean that any competitive threat that comes into the space is going to knock your company off. No, you got to be realistic with yourself. You know, what is that company's brand strength? Do they have brand strength in pricing? Do they have brand strength and consumers just love that brand? Will consumers buy that brand even in a recession? You got to think about all these type of things, guys. But if Michael Myers is coming behind your stock, man, you just need to freaking get out of that thing, okay? I don't care what PE is at. I don't care if it's at a 5 PE or 8 PE. They got some major dog coming in there and they're going to take share and they're going to knock your company off. Like, get out of it, man. It's just worth it to get out of it at a time, guys. So those are 3 reasons why I choose to sell a stock. I hope you guys really enjoyed this today. Make sure you follow me on Instagram. We are now over 3,000 followers on Instagram. We are really rising our ranks there. I'm trying to bring some great value on Instagram. Thank you for watching and have a great day.